What's going on, gold members? So here at Evolution Traders, for all of you new guys, we work all the time, right? So again, I know that I tell you guys get off the screens, enjoy the weekend, enjoy your time off. There's no reason to sit here all day. However, constantly, anytime I get that little inkling to kind of do some back testing, anytime I get that feeling to kind of, go over some trades or do some recaps or look at some technical analysis, I'm definitely going to do that. I'm going to throw it out there for you guys. Again, I would definitely recommend that all of you guys, do it as well, right? So the best thing about being a trader is that we have the freedom of time, right? So we don't have to sit here for 10 hours a day. We can live our normal lives. We can go do whatever it is that we want to do, and we can always get back to the chart. So the main thing that I do want to stress is that even though I want you guys to enjoy your time, I also want you guys to make sure that you're back testing. Go over your trades first of all, right? And then go over the trades that maybe potentially you missed. Start analyzing the charts, look at the patterns, look at the ranges, look at where your potential stop losses would be. Put yourself mentally in those, particular situations. So that way, when you do come back to the market, when, we're back from break or we're back from a weekend or from a holiday or the next trading day, whatever the case may be, we're mentally prepared to take trades based on us already identifying and seeing it over and over and over and over and over, right? So again, let's go ahead and look at the NQ. We're going to start off with the 5-minute time frame. We're also going to get into the 2-minute time frame. I'm only going to kind of review like the first 1 to 2 hours of the market, because again, I do want to stress that the first 1 to 2 hours of the market open is probably going to be your sweet spot and is probably going to be the best time to make money, hands down. Okay, so hands down, that's probably the best time to make money. And just look at the situation like this. If you can't particularly find a trade or get into a move that potentially, are able to be profitable in that first 1 to 2 hours, I would say don't even mess around with it. Just come back the next day. Again, because a lot of times, let's say you take a loss or, maybe even you're winning in the first hour to 2 hours, what you think is that, if you're down and you're red in the position, if you trade longer, or you might find that next setup that's going to break you even. If you're in the green, what you try to do is add more to that green versus just coming back tomorrow and doing it all again. So what we're going to look at here, and I'm going to give you guys a little bit of a variable here. There was a couple of plays right off the bell, right? So if we look at the first 5-minute candle here on the NQ, I've got my drawing tool here, so we can see a lot of the pre-market action here. We did have some numbers that were coming out on Friday. We got a little bit of an initial pop here, right, in the pre-market session, and then we were just kind of barcoding sideways. So what I want to kind of point out here in this particular price action, although there was, some potential for a long here over the 15661, we never confirmed it, right? So in this particular situation, what I would have been doing and how I would have been analyzing this trade for you guys, and how you guys need to be analyzing the trade, is if we do break this pre-market high level of 15661, we need to be long 100%. Okay, we're going to use a 1-bar stop wherever that it may have been, and we're going to take that for 15, 20, 25 points, and we're going to get the heck out of the trade, and we're going to assess, and we're going to make our educated guess whether we want to stop trading for the day or look for the next trade after that. Again, stick to the first 2 hours. So what we're looking at here, this is the opening candle off the bell, okay? What I want you guys to focus on is, although we are trading above the 20 and the 200 SMA, one thing that really my eyes are being drawn to is big pop candle, but a lot of consolidation, okay? A lot of consolidation, almost an hour worth of consolidation. And then we do have this support system here at the 20 SMA, and we have our next support system here at the 200. Here's where, a little bit of finesse comes in. Here's where a little bit of, anticipation of confirmation needs to come in. And what that essentially means is that if we identify that our 20 SMA is here, but we can also look to the left of the screen and see a lot of consolidation, well, let's be smart, right? Let's be realist. What do you think is going to happen if we lose this area? Okay. What do you think is going to happen? Potentially, we may drop to the next level of support. Okay, so for those of you guys who are critical thinkers and harsh thinkers, and maybe your first thought is, well, what if I take the short, right, which is this big body candle? What if I take the short, and then because it was consolidating up here, essentially creating a little bit of a flag pattern to break to the top side, what if it stops me out? My rebuttal and my answer to you is, what if it stops you out? So what? Then we get out of the trade because we're going to set a 1-bar stop, right? So in this particular situation, we could have either used the high as a stop, And as soon as this candle really starts to break down the lows, right? Let me get a little bit closer. As soon as we start to break down the lows here and we lose a 20 SMA, why not jump short, right? So here's another particular situation. So if we do take this candle short, why not use the candle we jump in, that 1 bar stop on that candle? That's going to tighten down our risk from here to the top of that candle, right? Does that make sense? Okay, so if that's the particular situation, then where potentially should we think about taking profits? Okay, at the next area of support. That next area of support being this very flat 200, because at this point in time, the market really doesn't and hasn't made up its mind whether it wants to go up or down yet. Yes, although it is dropping, however, it could have stalled down here and then continued to make that push up to the upside and kind of taken out the day's highs, right? So again, if we are going to take this candle, we could use this 1 bar stop. We can take the first entry through the loss of the 20 SMA with anticipation of confirmation that we're going to get down here to this 200 SMA, and we take our profits on the way down. And I can guarantee you, if you took it with the correct sizing, that trade would have been a one and done trade for the day. Because if you kind of look at where you would have gotten in on that breakdown through the 20 SMA, it would have been around 15,610, and it drops all the way down to 550, right? So that's about a 50-point drop in 5 minutes, guys. If you can manage to scrape 30, 40, 50 points in 5 minutes, I would seriously consider calling that a one and done trade for the day. Just saying, okay? So with that being said, if we miss this trade, okay, let's say if we missed it, now we've got our first close below the 20 SMA and we're sitting at the 200. What would I be looking for? Very simple. Confirmation of a loss of the 200. What am I looking for? 15, 20, 25 points, and I'm looking to get in and get out. What am I going to use as my stop? I'm going to use a close over the 20. Why? Because this is a very large candle, as we just went over. It's a 55-point candle. So I don't want to give myself a 55-point kind of means to an end loss. I'm going to try to tighten that up a little bit. So how can I tighten that up a little bit? I've got to look to my next area of supply to act as resistance, and I'm going to draw my line in the sand there. So in that particular situation, my line in the sand would be this declining 20 SMA, and my stop loss would be any close over the 20 SMA, which is going to essentially save me about 15 to 20 points on that stop loss. Now, although that stop loss is big, identify that your stop loss would have been very, very small if we would have entered into the breakdown of this formation, losing the 20 SMA and taken profits here. We would have been done and not necessarily looking for the confirmation of the 200 SMA on this particular trade. However, when we were in the live stream on Friday, we did have a couple of traders that waited for this move here to close. They took this candle and they profited on the way down here, took their profits, allowed it to bounce. We got rejected. And when we cleared out the first hour's lows here, right, which was here on this particular candle, this was another short position that was taken from some of the traders there. A little bit of a longer swing there on that particular move. But again, you know, there's different ways that you can potentially play it. Also, I want you guys' eyes to start drawing your attention to this move. When we drop and now you put in a low, you get your back test. However, a little bit of a 30-40% retracement here. Notice the 20 acting as support, or excuse me, resistance, rejection. So what we can actually start to do here is when a red candle takes out a previous green candle's formation and loses an area of support, which it did here, we can also jump this candle short and take this for a little bit of a ride. Now your profits would have probably come off here because you would be looking for 1, 2, 3 pushes lower. Does that make sense? So again, guys, Evolution traders, we work every single day. I don't care if you have to take 5, 10 minutes out of your day, go through, do some chart work like this, put yourself emotionally in the trades, visualize where your stop loss is at, visualize where you want to take profits. If you're a NQ trader, are you looking to take 10 points? Are you looking to take 15? Are you looking to take 20? Hold the runner, see if it just runs all day. If that's the case, put yourself in the scenario. Where would you have been stopped out? Where would you have been taking entries? Where would you identified an area of supply and potentially where you could have got in on the continuation flush down, right? Would you look at the first candle breakdown losing the 20 SMA into the 200. Those are all moves that you should be taking, especially if you're scalping these futures. You can snag very, very easily off the NQ 10, 15, 20 points. If you can manage to do 1, 2, 3, or if you can manage to do 2 or 3 or 4 trades, again, let's force a little bit much, but if you can do 2 or 3 trades a day, let's say you kind of break even on one, and then you win 2 for 15 points here and 17 points there, guys, you're looking at, you know, over 30 points captured, 40 points captured on the NQ. If your position sizing is right, the probabilities will play out in your favor. You're going to be profitable. You'll keep the lights on. You're going to continue to make money. You'll pass your funding challenge. You'll grow your personal account. You'll double it in 30 days. Again, allow yourself enough time and allow yourself enough trades that you can see if the probabilities are going to work out in your favor. Guys, this particular strategy in trading like this and using a 1 bar stop system is profitable about 65% of the time. Okay. The math is there. I've tested it over hundreds and hundreds and hundreds of trades. Other people that have been trading with me for 3-4 years now have also tested it. You will win 6 to 7 trades out of every 10. So as long as we limit those 3 or 4 losses to a 1 bar stop system, even if the bar is big, it's okay. If we limit it to a 1 bar stop system, your wins over the series of 20 trades is going to be profitable and eat up those rather larger 1 bar stops when we use them. You can also start cutting down those large 1 bar stops, like in this particular case, by identifying the consolidation breakdown and actually jumping short when we do lose, right, the 20 SMA with anticipation of taking profits at the 200 and using this current candle as your stop loss. Again, I hope this video helps you guys. Again, study it, rewatch it, go through, play it out on your charts. I'll see you guys all on the trading floor on Monday, or excuse me, Monday. I'll be there for a little bit because futures is open. Don't expect much to happen, but I'll see the majority of you guys on Tuesday.